Friends, what's up? What if I told you almost everyone in the XRP world has a completely twisted view of market cap, and because of it, they're wildly underestimating how high XRP can really soar? The same tired lie keeps getting repeated. XRP can't hit $100 because the market cap would be too astronomical. That argument sounds solid until you actually do the math and grasp the insane power of multipliers. Suddenly, a $30, a $50, even a $100 XRP doesn't just look plausible, it looks absolutely inevitable once institutional capital starts pouring in. Once you see this multiplier effect in action, you'll never look at market cap the same way again. A quick heads up, this is not financial advice. So, what's the fundamental truth people are missing? Market cap isn't a hard and fast ceiling on price. It's simply the circulating supply multiplied by the current price. It doesn't mean trillions of dollars have to flood into the asset. In fact, XRP has repeatedly shown that tiny, almost insignificant inflows can balloon its market cap by billions. This happens because of a crucial factor, a striking lack of liquidity. Case in point, a minuscule $80 million inflow once propelled XRP's market cap upward by a staggering $17 billion. That's a mind-bending 212x multiplier. It means for every single dollar that entered, the market cap expanded by $212. This isn't a theory, it's recorded history. This explosive multiplier effect is exactly why XRP behaves nothing like a traditional stock. Stocks have thick order books, deep pools of liquidity, and vast trading volumes. But XRP's liquid supply is shockingly small, less than 5% of the total. This means even a small tidal wave of capital creates a massive, vertical price spike. And that's only the beginning. XRP isn't just a speculative coin, it's a piece of critical financial infrastructure designed to move trillions in global payments. Banks and financial institutions aren't just thinking about it, they're integrating it right now. When that massive, real-world utility demand slams into its razor-thin liquid supply, the resulting price action will be nothing short of explosive. That's why top analysts keep highlighting examples like a $42 million inflow causing a jaw-dropping $22 billion market cap swing. These aren't random events, they are clear, undeniable signals of how this market will behave at a monumental scale. Before we dive deeper, a quick but crucial note. If you're serious about learning how to consistently spot these explosive 100x opportunities before anyone else, I've put together something incredibly valuable just for you. It's called the Ultimate Millionaire Investor Guide, Find 100x Stocks. This isn't just some boring PDF. It's a comprehensive resource with documents, images, videos, and more. This is the exact formula I personally use to pinpoint these potentially life-changing setups. If you're truly committed to building massive wealth, you absolutely need this guide, and it's in the pinned comment below. Missing out on these plays is simply too expensive. Also, for a limited time, you can get free NVDA stock valued at up to $200 with just a $1 deposit using my exclusive Robinhood link. You'll find that in the pinned comment too. Don't sleep on this, it's as close to free money as you can get. Now, back to the multiplier. People believe a $100 XRP is impossible because they're trapped in that archaic, old-school mindset that market cap must equal total investment, but that thinking is profoundly flawed. Consider real estate. Saying nobody can buy a $10 million mansion because the average home costs $300,000 is utter nonsense. The price of that mansion is set by what one single buyer is willing to pay in that exact moment. It's the same principle with XRP, a relatively small, concentrated order can instantly reprice the entire asset pool. So what exactly is this multiplier? In simple terms, it's the raw ratio of how much the market cap swells versus how much actual capital actually enters the system. With XRP, we have seen multipliers of 50x, 100x, even 500x in both directions. On the upside, that's precisely how we can go from a few billion in actual capital to trillions in market cap. On the downside, it's also why XRP can plummet faster and more violently than people anticipate. The swings are amplified both ways because the liquid supply is so thin. And this is where it gets truly fascinating. Analysts like Jake Claver and Zach Rector have crunched the numbers and laid bare how absurdly powerful this dynamic is. Jake points out that the entire retail sector doesn't even hold more than 1.5 to 2 billion XRP total, and the actual float on exchanges might be closer to a mere 1 billion. Compare that against the 100 billion total supply. This means new inflows aren't battling for the whole supply, they're fighting over a microscopic sliver that's actually trading. That's the very reason the multiplier exists. Now, let's consider ETFs. Even JP Morgan, a titan of finance, has predicted that between $4 to $8 billion could flow into an XRP ETF in the first year alone. If we apply even a conservative 200x multiplier, that translates to a jaw-dropping $1.6 trillion in market cap expansion. At today's circulating supply of around 58 billion, that catapults XRP well into the $30 range. Add in momentum and pure speculation, and suddenly a $50 to $100 XRP doesn't sound crazy at all. It sounds like simple, unavoidable math. Let me rephrase it another way. With XRP's circulating supply near 59 billion, a single $10 million inflow could theoretically move the market cap by $2 billion. That's a 178x multiplier. Now scale that up. If $5 billion enters in the first few weeks of an ETF launch, and yes, that's a perfectly realistic scenario, it could balloon XRP's market cap by $500 billion to over $1 trillion, depending on the conditions. That would reprice XRP into the tens of dollars virtually overnight. Now, the critical question is, when does this incredible multiplier effect eventually fade? Because it doesn't stay at 100x forever. As XRP matures, liquidity pools grow, order books deepen, and institutions create thick, robust markets, the multiplier will naturally shrink. Bitcoin is the perfect example. In its early days, multipliers were much higher. Today, with trillions in liquidity, Bitcoin's multiplier is often only 1x to 2x, sometimes stretching to 5x in moments of low liquidity. XRP will follow the exact same trajectory. So, in the early stages of adoption, multipliers of 100x, 200x, even 500x are not just possible, they are a documented reality. But at full maturity, when XRP is moving trillions daily, the multiplier will settle closer to 1x to 10x. That is precisely why right now, before this market is saturated, is the golden window for these gargantuan moves. Once the system is fully liquid, those insane multipliers simply disappear. And this is where people get it backwards. They dismiss multipliers as hype. In reality, they are a simple function of liquidity math. They explain why a few hundred million can send XRP rocketing vertically while a $1 trillion stock like Apple barely moves on billions of inflows. One market is fully mature, the other is just beginning its journey. But here's the ultimate point. Even if XRP's multiplier collapses to a modest 5x at full scale, that is still a monumental force. A $50 billion inflow into a global settlement network with deep liquidity could still add a massive $250 billion in market cap. And unlike fragile meme coins that rely on pure hype, XRP's adoption curve is driven by tangible, real-world institutional use cases. We're talking about banks, international payment corridors, tokenized assets, and the immense settlement demands of a globalized economy. This is also why Ripple once said XRP was built to be the next reserve currency. That's not a meme, it's the blueprint. When you truly begin to run these numbers, the picture becomes stunningly clear. A $100 XRP doesn't require a fantasy of trillions in cash pouring in. It just requires a small fraction of that capital, amplified through multipliers, interacting with thin supply in a high-demand environment. And ETFs are the perfect accelerant to make this a reality. And this is where we need to dig deeper into the actual mechanics of multipliers so you can see precisely why this is happening. Think about liquidity pools like pipes. If the pipe is wide, water flows through effortlessly without building pressure. If the pipe is narrow, even a small trickle of water creates colossal pressure spikes. XRP's liquid float is that incredibly narrow pipe. Only a sliver of the total supply actually trades hands on any given day. So, when even modest institutional inflows hit, pressure builds instantly, and the price absolutely skyrockets. This is why comparing XRP's market cap to Apple or Microsoft is completely misleading. Those companies have trillions in market value because their shares are widely distributed and exceptionally liquid. Tens of billions can flow in or out without moving the price dramatically. XRP operates under an entirely different set of rules. Its tiny float means each dollar pushes exponentially harder against the order books. That's the multiplier effect in action. And here's the big, raw truth. The multiplier isn't a magic trick. It is a direct reflection of a thinly traded market. Once the float expands and liquidity deepens, the multiplier naturally and inevitably compresses. That's precisely why early-stage assets like XRP offer a fleeting window of extreme price amplification that you simply don't get once an asset matures. Take Bitcoin for example. Back in its early cycles, it wasn't unusual to witness multipliers of 10x or more. Capital inflows were small, order books were thin, and the asset was breathtakingly volatile. But as Bitcoin's market matured, now sitting at a $2.1 trillion cap, its multiplier shrank dramatically. Today, inflows of billions produce relatively proportional market cap increases. Analysts measure its multiplier at around 1.2x on average, sometimes stretching to 2 to 5x in unique conditions. That is the ultimate destiny of every maturing market, including XRP. So what we're witnessing with XRP right now is a temporary, explosive stage of growth. Until trillions of dollars in liquidity saturate the system, multipliers of 50x, 100x, even 500x remain not just possible, but likely. But once XRP is moving cross-border settlements for global banks on a daily basis, those multipliers will inevitably collapse down to 1 to 10x. That's why the next few years are so critical. It's the window when these outsized, historic moves happen. Now, let's take an even closer look at how analysts are quantifying this. Zach Rector has described watching XRPs live order books and seeing inflows of just $1 billion expand the market cap by a staggering $50 billion. That's a 50x multiplier in real time, plain as day. On the other side, when outflows hit, the effect is even more exaggerated. We have seen downward multipliers of 500 to 900 times, meaning relatively small sell pressure wipes out colossal amounts of market cap. That's why XRP often looks like it overreacts to market moves compared to other coins. Jake Claver went even further, pointing out that the true exchange float could be closer to a mere 1 billion XRP, maybe 1.5 billion at most. Out of a 100 billion total supply, that's truly nothing. It means inflows are concentrated on a razor-thin slice of available liquidity. Even if retail decides to cash out at $10, $20, or $50 XRP, adding a billion or so to the float, it's still laughably tiny compared to the demand projections from institutions. This profound imbalance is what makes multipliers not just possible but absolutely inevitable. And then, there's the undeniable ETF factor. Think back to Bitcoin's spot ETF launch. Leading up to the approval, institutions were already front-running the news. Billions poured in, and Bitcoin's market cap surged. The same exact scenario will unfold with XRP. Analysts are already predicting $4 to $8 billion in ETF inflows in just the first year. But the critical difference is Bitcoin's multiplier is near 1x. XRP's is still triple digits. That means the same dollar inflow creates massively different outcomes. Let's run the math one more time. At a conservative 100x multiplier, just $5 billion of inflows could balloon XRP's market cap by $500 billion. At a 200x multiplier, the same $5 billion produces a monumental $1 trillion in market cap expansion, pushing XRP toward the $30 to $40 range almost instantly. And if momentum, speculation, and cascading demand amplify it even further, you start to see how a $100 XRP isn't a fantasy, it's a direct, liquidity-driven scenario. To put it into even greater perspective, if XRP's multiplier stayed at 500x during major inflows, just $11 billion could theoretically push the market cap by an incredible $5.9 trillion. That's a $100 price per XRP. Once again, this isn't trillions of dollars flowing in, it's billions flowing in, amplified by market mechanics. And this is the exact misunderstanding people fall for when they claim the market cap is too big. They are looking at it as if it's a one-to-one equation. It's not. But remember, this multiplier effect works both ways. When liquidity is thin, volatility cuts both up and down with astonishing speed. That's why we've seen XRP spike violently in bull cycles and then retrace just as violently when demand evaporates. Until liquidity scales up, expect whiplash moves in both directions. That is the inherent trade-off of the multiplier. Parabolic upside potential but also exaggerated downside risk. So when does the multiplier realistically compress? The answer lies in adoption and liquidity depth. Once banks, ETFs, and institutions are moving trillions daily through XRP, the order books will thicken. Market makers will add monumental depth. Volume will smooth out volatility. At that stage, multipliers will shrink toward Bitcoin-like levels. 1x, maybe up to 10x in moments of stress. That doesn't mean XRP loses value. It just means the days of 100x multipliers are gone. The price will then track more proportionally to actual inflows. But here's the crucial nuance. By the time XRP has that kind of deep liquidity, it will already be repriced to a much higher level. Multipliers aren't permanent, but they don't need to be. They just need to operate long enough for XRP to make its epic leap into double or triple-digit territory. After that, even a 5x multiplier on massive inflows keeps the momentum alive. Consider Bitcoin again. Its multiplier is small, but a $10 billion inflow can still create tens of billions in added market cap. With XRP, once institutional adoption hits full stride, we could be talking about $50 to $100 billion in sustained inflows from tokenization, settlement demands, and global corridors. Even at a modest 5x multiplier, that still adds hundreds of billions to the market cap. The key difference is that at that stage, XRP is no longer a speculative play, it's functioning as core financial plumbing. Now let's zoom out for the ultimate perspective. The ultimate question is whether XRP can truly serve as the backbone for global liquidity. Ripple has made it clear that cross-border payments are just the initial phase. Tokenized assets, CBDCs, on-chain settlement, all of it runs on liquidity. If XRP becomes the neutral bridge asset for that entire system, then its valuation isn't about speculation, it's about sheer, unadulterated necessity. And when trillions of dollars in settlement need to be supported, the market will reprice XRP to whatever level makes that liquidity possible. That's why multipliers are so deeply misunderstood. They aren't hype, they are the fundamental bridge between the thin liquidity of today and the massive adoption of tomorrow. They explain how XRP can leapfrog to valuations that most people dismiss as impossible. And they also explain why those multipliers will eventually fade as the market matures. Both things can be true at the same time. Early on, a $100 XRP is a function of multipliers. Later on, its stability comes from its massive scale. And this is the point most influencers conveniently gloss over. Multipliers aren't permanent, they are a transitional phase. They are the accelerant that gets XRP from pennies to dollars to double digits. After that, the global financial system itself keeps XRP elevated because it's embedded in the very infrastructure. That's why Ripple once openly described XRP as being designed to be a reserve currency. The multiplier gets it there. The utility keeps it there. So the next time someone tells you that market cap is too big or that a $100 XRP is impossible, you will know the truth. The reality is much simpler. Market cap isn't a ceiling, it's just a formula. And when liquidity is thin, that formula bends in ways most people simply don't comprehend. When you think about it, XRP's multiplier story is actually a perfect case study in how early-stage markets evolve. Right now, we're smack in the middle of the thin float era. The amount of XRP that actually trades hands is a minuscule fraction of the total supply. Escrow locks, long-term holders, and institutional wallets all keep the majority out of circulation. That means every buy and sell order has an outsized, exaggerated effect. And that's why so many observers get completely caught off guard. They look at the circulating supply on paper and mistakenly assume that's the true float. But the truth is, the actual float is much, much smaller. Exchanges only have so much available at any given time, and even retail wallets that hold XRP aren't rushing to sell at these current levels. When you combine this powerful scarcity with an influx of new capital, multipliers take over completely. This is why we've seen XRP shoot up dramatically on what looks like small news or relatively minor inflows. It isn't the news itself that creates the move, it's the razor-thin order books combined with pent-up demand. Add in the multiplier, and suddenly billions are added to the market cap within a matter of hours. But here's the piece most people miss. Multipliers don't just drive speculative runs, they also accelerate utility-driven adoption. Imagine a major global bank testing settlement flows with a few $100 million in volume. If the multiplier effect pushes XRP's market cap up by tens of billions, that creates an even stronger, more compelling incentive for other institutions to jump in. The price becomes a self-reinforcing signal. A rising price validates adoption. Adoption drives liquidity, and that liquidity feeds back into the price. This cycle is exactly how new financial backbones emerge. At first, they look unstable. They lurch wildly higher and lower because liquidity is thin. But, over time, the very volatility created by multipliers attracts more liquidity providers, more participants, and eventually stabilizes into a thick, robust global market. By then, XRP's price is no longer a debate about if, it's a discussion about where its ultimate ceiling lands. Now, let's revisit the long-term trajectory. In the near term, multipliers can stretch as high as 500 times. That's how you get scenarios where a $10 million inflow creates billions in new market cap. But zoom out a few years. As XRP grows into a $2 to $3 trillion asset, multipliers will compress, liquidity will deepen, institutions will provide constant order flow, and the market will stabilize around multipliers closer to 1 to 10x. That's not a bearish signal, that's the ultimate bullish outcome. Because by the time multipliers are that low, XRP will already be sitting at valuations that support trillions in settlement. At that point, stability is exactly what the system needs. Banks don't want 500x volatility, they want predictability. The early multiplier phase is about getting XRP to the level where global settlement becomes not just possible but routine. After that, price growth is steadier but still powerful. Think of it like the transition from the dot-com era to modern internet giants. Early on, internet stocks moved wildly because liquidity was thin and adoption was uncertain. Today, Companies like Amazon or Google move billions in market cap on any given day, but their multipliers are modest because liquidity is massive. XRP is following the exact same arc. So, where does this leave us now? Right in the perfect sweet spot. Multipliers are still extremely high, liquidity is still thin, and inflows are on the verge of scaling thanks to ETFs, tokenization, and institutional adoption. That means the outsized moves, the kind that reprice XRP by 10x or more, are still very much on the table. This won't last forever, but while it does, it's the exact kind of window that investors dream of. And that's why understanding multipliers is so critically important. It clears away all the noise and myths about market cap ceilings. It shows you exactly how XRP can reach valuations that most people blindly dismiss. And it explains why those valuations are not just possible, they're structurally baked into how the market operates today. The bottom line is simple. A $100 XRP is not some far-off fantasy. It's a very real scenario where a few billion in inflows collide with thin liquidity and a 100 to 500x multiplier. We've already seen it happen on smaller scales. The difference now is that adoption is aligning with massive institutional capital flows. That's the catalyst that could send XRP into the kind of repricing that looks impossible to the untrained eye. And once that repricing happens, the conversation changes forever. Because when XRP is already operating in the tens or hundreds of dollars, multipliers no longer need to be extreme. By then, the global system is fully in place, liquidity is robust, and XRP is doing the job it was built to do, serving as the backbone of the new financial era. If you're truly serious about positioning yourself for these kinds of wealth-shifting moves, you absolutely must grab the Ultimate Millionaire Investor Guide, Find 100x Stocks, in the pinned comment. It's packed with documents, images, videos, and everything you need to spot the next explosive setups before the crowd even knows what's happening. This isn't optional. Missing out on these insights costs way more than the guide itself. And don't forget, you can still claim free NVDA stock worth up to $200 with just a $1 deposit using my exclusive Robinhood link in the pinned comment. It's a quick, simple, and one of the best promos you'll find anywhere. This multiplier window won't stay open forever, but right now, it's still here. And XRP is the perfect case study of what happens when massive adoption meets thin liquidity.